Welcome to our YouTube journey where we unravel the mysteries of economic concepts, making them accessible for all. Today, we're diving into the world of inflation and deflation, shedding light on these terms that often swirl around economic discussions. So, grab your notepad, and let's simplify the complex and make sense of inflation and deflation. Inflation is like a subtle thief that quietly erodes the purchasing power of your money over time. Imagine you have a basket of goods that cost $100 today. In a year, due to inflation, those same goods might cost $105. This rise in the general price level of goods and services is what we call inflation. There are three main causes of inflation. The first cause is demand pull inflation. This occurs when demand for goods and services exceeds their supply. More people want the same things, causing prices to rise. The second cause is cost push inflation. When the cost of production increases, businesses often pass on those costs to consumers, causing prices to rise. The third cause is built-in inflation. This stems from expectations. If people expect prices to rise, they may demand higher wages, leading to a cycle of increased costs and prices. To illustrate inflation, think of inflating a balloon. As you add more air, money, to the balloon, it expands, representing the increase in prices. While a bit simplistic, it captures the essence of how the purchasing power of your money decreases over time. Inflation has practical impacts on our lives. First, it reduces purchasing power. Your dollar doesn't go as far, meaning you need more money to buy the same things you did before. Second, inflation influences interest rates. If your savings account interest rate is lower than the inflation rate, you might be losing purchasing power over time. Third, understanding inflation is important for making informed investment choices. Investments need to outpace inflation to ensure real returns. Now, let's explore the flip side. What is deflation? Deflation is the mirror image of inflation. Instead of prices rising, they fall. Picture the balloon losing air. While it might seem like a bargain paradise, deflation brings its own set of challenges. There are three main causes of deflation. The first cause is decreased demand. If people aren't buying, businesses might reduce prices to entice customers, leading to a deflationary spiral. The second cause is technological advancements. Improvements in technology can lead to cost reductions, resulting in lower prices. The third cause is debt deflation. When the value of assets falls, those with debts may struggle, causing a downward economic spiral. To visualize deflation, think of a balloon losing air. As prices drop, the purchasing power of your money increases. While this might sound like a good thing, persistent deflation can have detrimental effects on the economy. Deflation has practical impacts on our lives. First, it can lead to delayed purchases. Consumers might delay purchases, expecting lower prices in the future. This delay in spending can hinder economic growth. Second, deflation increases the real value of debts. This makes it harder for borrowers to repay loans. Third, businesses may struggle to sell goods if consumers expect prices to fall further. This can lead to reduced production and potential job losses. Economies aim for a delicate dance between inflation and deflation. Moderate inflation can stimulate spending, while deflation can encourage saving. Striking the right balance is like walking on a tightrope, and central banks play a crucial role in this economic ballet. Central banks manage monetary policy to maintain price stability. They target a specific inflation rate to ensure a healthy and growing economy. To put it all together, here are some practical tips and takeaways. First, stay informed about economic concepts and indicators. Second, diversify your investments to manage risks associated with economic fluctuations. Third, plan for the future by considering the impact of inflation on long-term goals like retirement. In conclusion, inflation and deflation have real impacts on our lives. By demystifying these economic terms, we hope to empower you to navigate the complex seas of inflation and deflation with confidence. Join us in the next video as we continue unraveling economic mysteries and making them accessible for everyone. Economics doesn't have to be confusing. Together, let's simplify the complex.